Good evening. This is the Elliott Wave daily update for the S&P 500 and the NASDAQ 100 for Wednesday, June the 12th, 2024. It was another pretty wild and crazy day, both in the S&P and in the NASDAQ. I'm going to start here with the S&P 500. I'm going to start on the hourly chart. And sorry that it has taken me a little bit of time to get this done because I really had to go back and review how this is all just extending upon extending upon extending. And so I've had to make some adjustments to the labeling and to include where these markets are likely headed. So what we remain inside of is this minuet fifth wave, but let me just open this up a little bit so we can take a look inside. So the basis is that we are in a minute fifth wave up. And within that, we've done minuet 1, 2, 3, and 4. So we remain within that minuet fourth wave heading higher. Now, when I get over to the NASDAQ, it's going to be a whole different story, but let's just go down. Let's take a look at this hourly chart. Here is that minuet wave 4. We're in minuet wave 5, and it just starts to extend. So I have sub minuet 1, 2, sub 1, 2, 3, 4, 5, 3. Put in the 3 there, the sub minuet wave 4. So we're off in a sub minuet wave 5, which in and of itself is subdividing. Now, in the S&P, we have a shot that possibly it's done, but I really don't think so. And the reason is because I've now gone through this to figure that it's 1, 2, 3, 4, and whether that completed the 5 or we still have one more liftoff to do, and then possibly. Now, what gave us our boosts today? Well, we had the CPI this morning, which basically was like, okay, we're going to like it. And then the market just started to launch and started to move higher. Apple, once again, although it only closed up 6, it was up again 10 or 12 points at one point. It was trading 219, almost 220. So it backed off at the end of the day. But what then again brought the market up, because we have to understand, it's like we had a really, really good little sell-off there going into the last hour or up until the close. Then we had the extra hour that gets added on. And Broadcom reported today. And Broadcom, at last I just noticed, that's where they closed, 1,495. This is the bid going out, 1,680. So it's up substantially after hours. Not such a big effect here on the S&P, but when we get to the NASDAQ, there sure is. So we got to kind of wait to see how this all plays out, because it could extend one more time in that fifth wave. And there, if it does, here, first of all, it met the resistance for minute wave 5, but that's not even the most common. That's like the second or third most common, 618. But it hit it right on the nose and then backed off. And now could it go back? So we do have a possibility where this sub minuet wave 5 is complete right there. And that would then complete the minuet wave 5, and that would then complete the minute wave 5, and that would then complete minor wave 3. So that's still the ultimate outcome that I'm looking for here, that we get completed with these minor third waves, and we start that little bit of a larger correction. Now, these extensions and these blow-offs that we're seeing are not untypical for the position and what we're looking to complete. Again, minor third. So it's extending and extending and extending. You would expect that in a third wave, And as the degree goes up, you're looking for even much larger, right? So don't forget that this is a minor 3, it's minor 3 of intermediate 3. So we're still inside this 3 of 3 move, which again, you'd expect. This is where that expansion happens. This is where we really get the push, and we're seeing it. Now, it's really difficult to try to count and trade Elliott in a market that's moving like this one. So I have to be honest with you, it's like as a day trader, I do recognize pattern. And so when I see 5 up and 3 down on my short-term charts, it's tradable. But what it is in terms of the larger picture or even the hourly picture, I get left until the very end of the day. And then I come in and do this. So it becomes very, very difficult. And it also is very difficult to try to pinpoint, hey, well, where's this going to stop? It's like we are in uncharted waters every time we tick to a new high. It has never been here. It's a new all-time high. So therefore, we only have what we can do is by projecting out on Fibonacci levels that we can use in terms of 382, 6.5, 0.618, 0.786, 1, and then so on as they multiply up. So with that in mind, here we have 54.55 as resistance. It is right now holding. Market's pulling back a little bit. Maybe it's done. I don't know. But I'm allowing for an additional high above 54.55. And basis on this little count, and that's what this one is. If this is 1, 2, 3, 4, and then I'm looking for a 5, we got 54.67 up on the top. Now that kind of blows through the fifth wave here in terms of 1.618, which is at 54.66, not by much. Again, we're looking for that sub-minuet wave 5, but we got to finish this sub-sub. So we're looking for the sub-minuet wave 5 to complete, and that could get it up into here. And then also at the same time, 5, right, of 5, of 5. So we'll get up there, and that's a possibility that it can complete up in this zone. Now, the minute, no. It's holding right now, but I have to tell you, we've got way up here. Not necessarily just right yet. I'm looking for something that high, but I cannot rule it out. So while we continue to try to just I just actually want to get to the end of that minor third, come down in that fourth wave, right? So that should be good trading coming off, but it's going to be a minor 4 followed by a minor 5th wave to finish an intermediate 3rd wave, which is going to give us an additional drop on the intermediate 4th and another rally. So is it safe to say that the S&P has a high chance that it's going to get to 5,700 to 6,000? I would say yes. At right now, how the markets are trading and what's fueling them. Now, initially, everybody thought, okay, the Fed, they're not going to be so hawkish right now. They're going to come out a little bit more dovish, and maybe they will discuss the possibilities, strong or not so strong, of rate cuts happening at the September meeting. Didn't happen. In fact, kind of got, well, we can still going to put it off. We're still going to have these rate cuts, but they might be extended out into next year. Well, that threw the market into a little bit of a tizzy, and then Broadcom came out with their earnings after the close, and it just roared right back. Again, heavier in the NASDAQ than the S&P. So let's just kind of wrap this up. We still have everything pointing higher, 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 higher. The 200 turning up now, right? Now getting a nice little curve going there. The 50 getting a very solid upward trajectory. And the 20 and the 13 both pretty heavily heading higher. Okay, over in the NASDAQ. Wild and crazy. Wild and crazy is all I got to say. Here was the sell-off. Here was Broadcom. So the high today was 19,612. So the index itself now is up another 100, but during regular session, the cash market was up 254. The future market was up over 300. Again, so is this the blow off? I would say yes. I would say yes, it is. Now, what I've done, let me just pull this out. Let's take a look at it on the 4-hour chart. It has extended in multiple extensions here. So here we have still, I'm using this anchor here at the April low, which was 17,203. Oh, is it? No, 113. So 17,113 was that April expiration low. And now we hit 19,612 in June. So a month, almost 2 months out, and we've added close, but we've added over 2,000 points, almost 2,500 points. No, it is 2,500 points. So it's been incredible. So off of this, we have minuet 1 and 2. We have sub-minuet 1 and 2. And I've extended it out. There's 3, there's 4. We are in, we had sub-minuet wave 5, and then minuet wave 3. That's a little bit of a change. Wave 4 here. And then we start again in minuet wave 5. And that's just to put in the high for minute wave 5, minuet wave 5, minute wave 5, and minor wave 3. So where can they go from here? Well, without discussing the tomorrow's PPI and how would the market interpret it or not interpret it, and will there be additional follow through to what really the Fed did not do, and maybe the setup that the market might feel, or just a more negative reaction coming based on just that reaction versus going to follow through and push harder because of Broadcom and Apple continued to rally strongly. We had NVIDIA now making post split new all-time highs. New all-time highs again now in NVIDIA. We saw a very strong rally in Microsoft, even Meta back above 500. Even Tesla rallied strong today. So with that buildup and that continuation of just the market just pushing and pushing and pushing, it does take on that parabolic nature, and that keeps it into that category of blow off top. So again, that would just be to complete the minor 3. And then we go into a minor 4th wave. And again, that does factor back down to here, but it's within the territory, if you remember. So this is not over yet. I still think we're close, but it continues to extend. Like I extended it one more time with the sub degree. So this minuet 3rd wave is quite the wave. Would you consider 17,301, the bottom of wave 2, and then 19,155 as the finishing point for minuet wave 3. It's been quite the ride. Very small, very short wave 4. That hopefully is not going to present any problems, but that's what we got, and way below minimums in terms of what we would look for in a 4th wave. So coming inside there, I reinstated for minuet wave 5. And right now, what we got left is we have the 100% sitting at 16,000 and 19,658. So that could do it. It doesn't, we'll see what happens. But beyond that, let me just kind of open this up a little bit and see what we can get going on here. So here's our resistance levels. We have 100%, and that would be for minuet wave 5, and that's at 19,656. Then if I go inside this wave, where does that sub minuet look like it can get to? So sub minuet wave 5 of minuet wave 5. And that could come in at 19,684. And then we start running into this one over here, which is the minor 3. 19,722. If they decide to go up another 200 or 300 points, where does that leave us? All the way up here. So what I was expecting is the possibility we might get 20,000, but that would come in an immediate wave 5. Cap the whole thing off. Well, this just expands. Doesn't mean that it's going to continue at this rate, but right now, I don't see anything really letting go. We see the continued push and flood of capital. So when we're dealing with the options flows, we're dealing with these different things, then it does contribute. Now, how does that really interact with Elliott? Much differently than, say, 10 years ago, much differently than when I first started doing Elliott, much, much differently. Algorithms just do what they are programmed to do, period. So there's no thought. It's just push the button, go do the trade, push the button, do the trade. And so as long as that happens, those same algorithms are like, if you're a dealer, you're selling calls, you're buying stock. Boom, self-fulfilling prophecy on going higher. And the more and the heavier it gets, the heavier that these things take off. So not done, but I do feel that it truly is a strong blow off. So resistance, 19,656, 19,684, 19,722, 19,751, and then 19,840. That's what we got. That's the cluster for tomorrow. Now, also tomorrow we have, well, first let me just say, look at moving averages. Look at that trajectory. That's parabolic. That's parabolic in nature. It's just pure parabolic. So how do we want to deal? Well, we just deal. That's what I got to tell you. You just trade it. And it makes it more difficult because if you're a position trader, you're trying to capture, do you want to put on a long position now? That's a tough decision. Do you want to put on a short position and then have to sit and ride out these massive rallies? Difficult decision. So in the NASDAQ, individually, it's a tough call as well. So it is going to stay interesting because interest rates are again front and center, and still they should be. As I've discussed previously many times, that we have the pecking order, what I call it, within the market, and what sits up there at the top always are interest rates. Interest rates control everything else. What we got to pay to borrow and what we got to pay to get, when we lend. That's what controls everything in terms of the market. And so I think that's going to continue to be the case. Now, tomorrow, let's take a look and see what we got coming out on the old economic calendar. What we have are initial jobless claims and producer price index. Jobless claims, PPI. Both of which basically CPI and the jobs market, or just jobs and the economy, were both kind of like right there, front and center. But again, Powell, as I said to a friend, I said, it just seems that Jerome Powell cuts and pastes from month to month to month, never changing anything. He repeats the same thing for as long. I've been listening to these all year. So we're into the sixth one, or at least the third. And it just seems he repeats. He's been doing that for a very long time. So let's see what will happen. So again, PPI, 8:30 a.m. and then jobless claims also at 8:30 a.m. And after that, It's up to the market. All right, I'm going to finish it up there. Our next update will be on Thursday, June the 13th.